It's Wednesday. We're coming up to that 10:30 a.m. time slot when we get those oil numbers every week. So we'll jump over. You want to talk about some volatility, man. How about it, right? Even since this morning, early, we were down there at about $70.60. We're now up $1.30 from where we were just as of about 5 a.m. And come on, chart, cooperate with me. I want to pull this back. There we go. Because, yeah, quite a run. And then, you go back to Tuesday morning. Man, we're almost $4 above where we were trading at 24 hours ago.
It's amazing.
That's quite a run.
And it was a huge draw last night.
For API?
Yeah.
Okay.
It was 9-point-something million barrels.
Okay. So
I don't know what the expectation was, but that was a monster number.
Definitely. And, of course, a lot of this has to do with the geopolitical deal. We're just talking to our man Kevin Hanks, just talking about, the sanctions on Iran, where zero, basically, oil is going to be coming out of there, so that's sending the price higher. But either way, we get those oil numbers in less than 10 minutes, so let's take a look at some of the possible trades we have out here. So when I first pulled this up, and this is the good benefit of having multiple spreads, right?
Okay.
Because I was thinking, oh man, we're going to be so far away from where most of these spreads are that it might not set up well. But fortunately, it's actually moved so much that we are going to have some spreads in terms of that it's going to be right at one of the pivot points. So we like to look at the different time expirations and look at possibly setting up a bullish and a bearish spread simultaneously to look for some volatility. So we'll start it off with the 11 a.m. expirations, okay? And it's remarkable that normally we do these examples. Oil's just moving so fast, man. I feel like we're, between the 6 minutes that we explain this trade, it's just moving. So $72 would be a price you could use for the 11 a.m., which is not bad, right?
That's your base.
Yeah, we're about 10 pennies away from that level. So here would be your bullish spread from 72 up $1.50 to 73.50. And you're going to have no intrinsic value here because you're about 10 pennies out of the money. And then on the flip side of that, here would be your bearish spread, where you have the same $1.50 to the downside, except all your intrinsic value is going to be in this spread. So you'd be selling the bearish spread. We'll go per one contract. You'd be buying the bullish spread. And so the difference between these is basically in the intrinsic value you're paying for the bearish spread. So they're lining up for, call it, what, $47 for both of them?
Okay.
Now, keeping in mind that this has a little bit of a bearish bias because you start off with value to the bearish side. Not much, though. You're only talking about 8 pennies in oil, of all things, that's moved $4 in the last 24 hours. And we might see a little bit more premium priced into these today with the type of moves that we've got, right? In terms of $1.50 is totally achievable before expiration when we've gotten $1.50 since 5 a.m. alone.
And because of the size of the draw, it's like, okay, the size of the draw was large, so can the miss be large, too?
Okay. You're talking about the API for last night. Sure.
Right.
Okay. So when you jump to the noons, now this is why, the noons are getting set, the noon expirations these are getting set basically ahead of the 10 a.m. launch. You have the 11 a.m.s getting set before the 9 a.m. launch, so they're going to have slightly different price levels as oil jumps around. So this one, 11 a.m.s, $72 was the point we got to use.
Yeah.
Noon, we're going to have $71.75. So pretty similar, except, number one, you have the extra hour. You have the extra hour no matter what, right? But then you're going to have a little bit of a flip in terms of you're going to have some intrinsic value to the bullish side now. Because here's your bullish spread, same thing, $1.50.
Yep.
Except this time, you're about 20 cents in the money on the bullish side. And your bearish spread is going to be completely out of the money, so that's going to be just premium. And let's see where these line up. You'd be buying the bullish spread, you'd be selling the bearish spread. Now,
56.
Yeah, and the reason why this is going to be more is because you're going to have 20 cents of intrinsic value here, whereas you only had 10 cents, and even as we tick around, so that one's, what do we do, 56, right? But we're climbing to that 72 number. So let's just jump to the 11 a.m.s because that's going to be less intrinsic value, and set this one up again and see if it's changed at all. So here would be your bearish spread. There we go.
Yeah, it's only 6 pennies away now.
There's your bullish spread. 47, pretty similar.
Yeah.
All right, so even, what did get sucked out maybe on the intrinsic value added on, so 47 for the 11 a.m.s, about $56 for the noons, and that's going to represent 47 to 56 pennies basically away from whether it's $72 or the $71.75 that would be using for the noons. And let's just take a look
at this thing move, man.
That's it. And I could see it's happening. I said, this isn't, it's going to be moving around as we walk through the variety of trades. Now, what happens is the 8 till 2:30s your only option, if you wanted to take both sides of the trade, would be $71, which wouldn't really work since we're a full dollar away from that. And similarly on the dailies, and that's just because oil was trading at $71 right here, you know, when these were getting set. Not going to work as well. Now these would work, you know, as in you want a 230 and you just want to go one way or the other. Maybe you're going to short it. Just to talk about, because that's not a bad trade in terms of 72.50. Just to talk about examples, oil's trading at 71.97. You could short it and you get, I mean, look at the risk reward, right? You have a $3 spread.
Yes.
And to risk 70 to make 230 essentially. The reason why you're getting that risk reward is because you're selling it about 16 pennies, 15 pennies below the market. That doesn't seem like a lot of premium to lock in that type of risk reward with that type of movement, right? For sure. So yeah, if you wanted to make a volatility trade, you have the 11s, you have the 12s, and you could always just make one side of this trade in terms of you know, like for instance, if you just want to go bearish, same thing on the 72 one. I mean, these are just, when you get this type of action in oil, it's kind of fun to look at because, you know, same thing. You could sell that. You're only risking 24. Basically, your risk is up to 72.
Right.
And, you know, basically it's all premium you're paying. You have the contract trading right at 72. But not a bad trade if you're looking for a retracement.
Not after
from where we just were, right?
Exactly.
I mean, you have profit potential down to 70.50. We were just there. 70.50 at 5 in the morning, you know, and meanwhile you're risking 1 to make 5, basically. You know, for every dollar you put up in risk, you have $5 in potential profit going one way or the other. But then you need a directional bias. That's a bearish trade. You know, versus the volatility trades, it's nice because all you're looking for is some volatility. But what you want to be careful of is how much they're making you pay for premium. Because today's trades are a little bit more expensive than they have been. With $46, because you need about 50 cents a movement. And what's important to keep in mind, you say, okay, you only need 50 cents, but to go back to, let's just say, the 11s, because that's where we're right, but almost at 72. So you only need 50 cents of movement to break even. But if what's important to keep in mind is that you can only make $1.50 on one of these contracts. So it's not like if oil goes $2 or $2.50, you'll recoup it all. You could make more if you closed out one end leg of it before the other, but realistically, right, your max profit, if you just kind of let them both go, is $1.50, and you're putting up almost 50 cents of that. Money. Should be interesting. We'll see.
Stay right there, folks. Tommy and I are going to be coming right back with those numbers. Dow right now up 215, NADEX up 33, S&P's up 15. It's hard to comprehend that oil's at 72.
When's it going to be at 80? We're almost right there, right?
That's a big number, man.
We got 3 minutes. We'll see where it's at 10:30.
Come right back, folks. Welcome back, folks. Let's go take a look at those oil numbers.
So we have inventories falling 9.89 million barrels. The median estimate, I know API was a big number, but median estimate was only a decline of about 3 million barrels. So with that in line, let's jump back over to the charts and jump over. And quite a little pop. To the upside we go, man. No backing down.
No backing down at all.
So when we started kind of that analysis, we were trading about 71.90. We're now about 50 cents above that level. And depending on what trade we were looking at, the 11 AMs, we're going to have $72 being our kind of pivot point. So already, you know, the bullish trade, you're about 38 cents in the money. That was going to cost us about 46. The noons, though, that was going to have a slightly bullish bias because 71.75 would be your pivot point. And just to pull up, so this would be your bullish spread in the noon trade where all your value would be right now. And, you know, you'd be able to close that for about 63. That was going to cost us about 56. So you can see that it was priced pretty correctly in terms of, I mean, it would have been
amazing.
It would have been surprising if we got no action with the type of action we've been getting today. But let alone, that's a 7 million barrel miss. In terms of estimate, right? Big numbers, and oil is climbing 72.50. We might be at 75 by the end of the show. We'll see what happens.
Well, because when you go look at the actual chart too, I think we'll pull a chart up after we go over these numbers. But the chart, I believe the top of that chart is somewhere about $74 or $75.
Okay, it's recent high oil. For sure. So just to go over the numbers that came out at 10:30. There's your headline number in terms of Cushing down 9.89 million barrels. Median estimate was a decline of about 3 million barrels. Cushing crude down 2.7 million. PADD 3 crude down 5.1. Gasoline, right in line. Pretty amusing with how far crude is off in terms of gasoline. Right on the number, basically. Distillates, basically flat. Estimate was an increase of 1.6, so that one coming under where they thought it was as well. And then you have some different inputs in crude imports production. But quite a number. Let's jump back one more time before we jump away, and we'll check back in. But, man, yeah, 72.50 as we speak.
That's quite a bar, too. I mean, that's a powerful bar.
Definitely. Especially, right, when we just were at $70.50. We're now $2 above where we were trading at about 5.5 hours ago, let alone where we were trading at 24 hours ago, which is just remarkable, man. I mean, there it is. 10:30 yesterday. We're trading at $68. We're now $4.36 above where we were, man. That is just remarkable on a 24-hour basis.
Yeah, and so if we bring up, I'll just bring up this, take a look at what this high was out here. So, now this is going to be a delayed quote, folks, on this one here.
And that's what's great. Little plug. If you want to download that demo account for NADEX, you get those live quotes in there. It's always great. So what are we looking at? 72.70.
Yeah.
Now what's great is, so we're at 71.90 on this chart, but we know we've already spiked up to about 71.50. So 72.50, 72.70, and that is the high. What day are we looking at? May 22nd. 72.70. I got jumped. We might be back there already. No, we've pulled back a bit. Okay, look at that. So let's zoom back in. Pulling back a little bit, 72.25. We'll check back in one more time throughout the hour.
Oh, there's going to be a little volatility.
That's why I was like, oh, look at that pullback. I mean, from the highs, we're up there almost 72.60. We're now 40 cents off the high of today, but pretty remarkable. We were within about 10, 11 pennies of that high, 72.59. I imagine we might make a run for it, right? We'll see.
I want to pull this back. Let's see. We'll pull this back a year. I mean, this run and the oil market has been actually extraordinary. So let's just I'll do 2 years. I just am curious. You don't even have to. I'll do 1 year.
It's really 1 year ago. You can see that's where the run started. 42, right?
Look at that.
Yeah.
$43 a year ago.
Yeah. I mean, it was $40, I say 40, anywhere in the 40s was normal for a while. Once it got back above 50, remember the bulls are kind of like, oh, oil back to where maybe $50, just mentally $50 was a big number. But we were sitting under it for a while, and then we plowed right through 50 and never stopped. Remember, and we were flirting with it, there's 50, and before you knew it, you were at 65 in terms of from about October of the last year until February. Quite a run.
And then if we bring this back, let's bring this back now on
oh boy, here we go.
Yeah, 15
no, I'm like ready for the roller coaster.
Yeah, so look at this. You know, the thing that's intriguing here, you know, there's not much in the way for this to go to $107. It's like, well, actually, what are these lows here? Oh, that's interesting. So the lows of 2011, a 75. The lows of 2012, a 77.
So that's a little bit of a bullish bias you're putting in there, you know, but, you know, you could say the same thing as in quite a rocket ship. This thing could be back down to $40 in no time as well.
If it gives it up,
right?
Yeah.
I mean,
no doubt. No doubt.
It goes both ways for sure.
Wow.
Pretty cool.
Amazing. Let's go back to the oil market.
Okay.
What do we got happen with oil out here? So volatility. Look at look at this thing.
Checking back in on oil. So it's 10:55 right now. We're about 25 minutes after the number, and we're at session highs of about 72.70. So just to kind of wrap up again, what we're looking at, 11 a.m.s. You could have used 72 as kind of your pivot point. Now that one was going to have a little bit of a bearish bias, right? Because we're trading at 71.90 prior to those numbers, and even the 72 number right now, you're talking about $72 in value. That total trade for both legs is going to cost about $46, $47.
Yes.
And if you decide to go for the noon, which was 71.75 was going to be the pivot.
You get some big good picks
That one you're looking at about $88 in value right now.
It was 57.
57 was costing us. And again, you know, this is where that's just one leg of the trade. You could always close that out. If you ever got a huge turnaround, your bearish spread will remain active until noon. But again, not a bad trade to trade volatility anytime. We got 80 cents of movement to the upside there.
Pretty amazing, man.
Oil rocking and rolling, man.
Yeah. Now the gasoline pumps, folks. Okay, fill them up because
go get some gas right now before they get out and raise those prices, man. Because they're coming. That's $4+ in the last 24 hours, man.
Amazing.
Big numbers.
Stay right there, folks. We got swim lessons coming up next, and then we have our man Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.